Hey, what's good, guys? Welcome back to another bootcamp video. In today's lesson, I'm going to touch upon fair value gaps and how to use them and spot them in the market. In this mini bootcamp series, we go over all the steps to be successful in the ICT silver bullet strategy step by step. Before this video starts, make sure to leave a like and subscribe as it lets me know what type of content y'all like. So let's get right into it. Alright, so what is a fair value gap and how do we spot it? So basically, a fair value gap is simply just a gap in the market that tells us that there was an imbalance, a volume imbalance, a regular imbalance, um, a space where price was never bought or sold. It was just running profits by all traders, all institutions, and shit like that. Okay, so I'm gonna basically show you guys how it looks like. I'm gonna draw rectangles up on the screen and show you guys where to spot it. Okay, so let's say we're going on a bullish trend. All right, let's say we're on a bullish trend and we're going up and up and up, and you see something that looks like this. Okay, so a fair value gap looks something like this. So fair value gaps, again, like I said, there's a gap in the market. So let's say we're going bullish. Um, you would take the strong move up, and every fair value gap has three consecutive candles that make up the fair value gap. I'm gonna change the color of this box real quick so I can easily highlight for you guys easier. Um, the top of the first candle, you're going to mark out for bullish trends. Remember, for bullish trends or for a bullish movement, meaning when it goes up, you're going to look for three consecutive bullish candles, and on the top of the first candle, you're going to mark out the rectangle, drag it up to the bottom of the third candle over here. That includes the wick. If there's a wick, you include the wick. If there's a wick, don't put it on the candle, put it on the wick. And just drag it out. Just like this. This is a fair value gap over here. So you see this gap between these two candles, this one and this one. Ignore this one because this just indicates that it's a bullish trend. I'm just showing you guys. So it makes it a little bit more easier. Um, this is the gap in the market. This in between. Whatever's in this box is the gap. And basically what it tells the institutions is that this price or this box over here has to be filled. They don't really use a box. Institutions never use what retail traders use. They don't use the tools that we use, nothing like that. But imagine if this box wasn't there. They see something like this with numbers in between it. There'd be like numbers in between each candle. That's what institutions see usually, or banks or whatever. And they say, okay, this area needs to be filled because without it being filled, there's just going to be a void in the market, which does not make sense. So hypothetically, or not hypothetically, but usually what price does in a stable market is it would come down to retrace into this zone and then continue going up even higher. Okay, so that's what a fair value gap acts as. It acts as like a entry level zone for traders, for retail traders, and that's why we use the fair value gap. So I'm gonna show you guys what it looks like on like the actual chart. So let me zoom in. There's fair value gaps everywhere. Everywhere there are fair value gaps. So I'm gonna go on the daily time frame so I can show you guys easier, I guess. Okay, so we can spot so many fair value gaps right off the bat, but you're always going to use the most recent one. Every single time you're going to use the most recent fair value gap that you see on screen, which is this one right here. So this blue candle, we know that the bias is bullish, so we're going to look for a bullish entry when it comes to fair value gap. We're going to grab a rectangle tool, and we're going to mark out the top of the candle, top first and the bottom third of the fair value gap. This includes the wick. Remember, guys, it includes the wick, top and bottom, and just drag it out. So you see how price tapped it in once and went up, and tapped it in a second time, and then third time, and then went up. Like this blue candle over here, like if you go on the 1 minute time frame, 1 minute time frame, we're above this rectangle over here. See how it tapped it and went straight up, it just shot up. Yeah, that's basically what you're seeing all the way at this candle over here. This candle. So all that price movement, price action is in that 1 minute candle. Basically it. So how do we implement it with the ICT silver bullet strategy? Now, my 2 previous videos, you guys can go watch them, go in order. We touched upon liquidity, we touched upon market structure shift. Now is fair value gap. This is the last step to the ICT silver bullet strategy. So this is how all of it looks together. Okay. The next video, I'm going to teach you guys how to do the full ICT silver bullet with the time frames, with the entry, with the emotions, with the control, with everything. But right now, I'm going to show you guys how it looks like put together. And tomorrow is the full trade. I'm going to show you guys. So let's say we're on the 1 minute time frame. Okay. You're going to look for a liquidity sweep, right? We can go any time frame for now. We're going to go, okay. So we're gonna mark out this liquidity over here, and then mark out liquidity down here on the bottom, right? This down here is liquidity. We can put it here as well. So let's just put it down here. This huge move is liquidity on the bottom. This is sell side, this is buy side. And as you can see, price swept liquidity to the upside. It swept buy side and kept going up and up and up and up. And then up and up and up. Over here, there was a market structure shift because anywhere between here, like after this move up, it's just noise. It's just price doing its thing. It's consolidating basically, right? So because it's consolidating, price is not making higher highs and it's just staying in one area, telling us that this down here is a market structure. This is a market structure point. So you see what happened after this? Price then closed, like this candle over here, closed under this line, telling us that this is a market structure shift. Now, I didn't show you guys what a fair value gap on the bearish side looks like. I'm going to show you guys right now what a fair value gap looks like on a bearish momentum, which is exactly right here. So the first fair value gap we see is this one over here. So for a bearish fair value gap, you always want to use the bottom of the first candle to the top of the third candle, and then just drag it out. Okay. For bullish, it's the top of the first one, bottom of the third one. For bearish, bottom of the first one, top of the third one. Okay, it's just the opposite, like usual. So because liquidity was swept to the upside, we're going to look for entries to the downside. We got a confirmation to the downside because there was a market structure shift and there was a fair value gap, but there was no entry on this fair value gap. Price kept making lower lows and lower highs, and it created one strong leg down, meaning this right here and this right here are two recent fair value gaps. So we're going to mark this out, and we're going to mark this one out. Now, a common mistake people would do is enter at this fair value gap over here, even though you could. But I like to wait for a second confirmation, especially if there's so many fair value gaps in one area. Usually there's supposed to be one fair value gap, but in this scenario, there was news today. There was news, so that the market was kind of affected. And it made so many imbalances. So I took into consideration that this is a fair value gap. That would be the perfect entry for me. So I deleted this one, and I let this one run. And if you put your entry on a short position, as soon as it taps this one, you make it a 1 to 2 risk to reward. Okay, always make it a 1 to 2. Put your stop loss right above, a little bit above the fair value gap. So price taps it, goes all the way down, and hits your take profit. No problem, instantly, just like that. It hits your take profit. Super simple, and that's how a fair value gap is laid out for you guys. That's what it looks like, and that's it. That's pretty much it. That's all what fair value gap is. Tomorrow we're gonna touch upon everything, the whole ICT silver bullet strategy, and yeah. Thank you guys for watching, and peace out.